Welcome to the U.S. Financial News Channel, friends. Here are some top financial news for the day. According to the Bureau of Labor Statistics, consumer prices in July showed a faster year-over-year increase compared to the previous month. The Consumer Price Index, CPI, rose by 3.2% in July from the prior year, a slight uptick from June's 3% increase. Monthly, prices went up by 0.2% in July, matching June's increase. On a core basis, excluding the volatile costs of food and gas, prices climbed 0.2% over the previous month and 4.7% over the last year, in line with economist expectations. Notably, the annual core increase was the smallest since October 2021. Rent prices continued to rise, with the index for rent and owner's equivalent increasing 0.4% and 0.5% respectively on a monthly basis. The shelter index played a significant role in the monthly core inflation increase. Several indexes, such as motor vehicle insurance and education, also experienced price increases in July. However, some indexes saw prices soften, including airline fares, which dropped 8.1% for the fourth consecutive month, and used car and truck prices, which fell 1.3% in July after a 0.5% decrease in June. Energy prices decreased by 12.5% over the past 12 months ending in July, although there was a 0.1% increase on a seasonally adjusted month-over-month basis. The food index went up by 4.9% over the past year, with a 0.2% rise from June to July. Notably, egg prices fell by 2.2% month-over-month. The another important news we got was that IBM's CEO, Arvind Krishna, has announced a pause in hiring, along with plans to replace around 8,000 jobs with AI technology. The first targets will be back-office functions, starting with HR roles. IBM is actively recruiting for AI-related positions to facilitate this transition, which will unfold gradually over a few years. This shift could see AI taking over up to 30% of non-customer-facing roles within 5 years, affecting fields such as finance and HR. The move reflects the wider trend of tech giants embracing automation, but it also raises concerns about the impact on the workforce. According to experts, AI's potential to replace human jobs has been a long-discussed topic. Policymakers and investors are taking notice, as AI is expected to bring substantial economic growth by streamlining tasks in various sectors. However, a recent report from Goldman Sachs economists predicts that up to 300 million jobs globally could be influenced by AI's advancements, particularly in advanced economies, suggesting a potential transformation in the job market. Finally, in an insightful report by Goldman Sachs, it's predicted that the Federal Reserve might implement rate cuts as early as next May. This decision, as outlined by Goldman Sachs's economics team, is projected to occur in the second quarter of the coming year, regardless of whether the U.S. economy enters a recession. The rationale behind these potential rate cuts is to normalize the funds rate from a restrictive level once inflation approaches its target, rather than as a response to a recession. Currently, the Federal Reserve's benchmark interest rate stands at 5.25% to 5.5%, marking its highest point since 2001, after an aggressive campaign of rate hikes. Amid the financial landscape, where a recession seems less likely according to many economists across Wall Street, Goldman Sachs experts foresee unspectacular growth, with inflation taking the center stage as the most probable trigger for these rate cuts. Recent data from the Bureau of Labor Statistics further strengthens this notion. The Core Consumer Price Index, a metric excluding the volatile food and energy categories, showed a consistent 0.2% increase in both July and June. This is notable, as it's the first time since February 2021 that such consecutive monthly increases have been observed. This development has led many economists to anticipate that the Federal Reserve will maintain steady rates in its upcoming meeting in September. Thank you, viewers, for watching the latest updates. Please subscribe to U.S. Financial News now.